Warm welcome to the panelists, and we just now go the other way around to give a quick introduction.
Sure. Thank you, and great to be here. We have a simple and yet unique business model here in Switzerland, in the sense that we combine financing and corporate advisory solutions for our clients, who are entrepreneurs, family-owned businesses, within one team. So we are able to do both financing, but also advisory services in the sense of debt advisory, M&A for our clients. And yeah, very happy to be here.
Thanks for having me. My name is Ray Hindi. So I'm one of the co-founders of L1 Digital. Philippe introduced it. It's a $400 million crypto-focused asset manager based out of Zurich. We're mainly focused on, sourcing some of the best, investing in some of the best entrepreneurs within the space, Lucas being one of them.
Hi, my name is Lucas, co-founder of Centrifuge. Centrifuge is bringing real-world assets on-chain. What does that mean to the maybe not DeFi native person? We're allowing private credit, public credit assets to be tokenized and brought on-chain, like benefiting from a lot of the infrastructure that DeFi can provide and kind of bring liquidity and decrease costs and kind of like take over a lot of the fund management, asset management side of it and automate that.
Matthew Arrow, I'm the co-founder and CEO of Dark Forest. We are a digital asset market maker, and we provide execution services as well, looking to make the digital markets more liquid and efficient.
So we have heard quite a bit about DeFi and TradFi. In almost every panel, it was kind of mentioned, and there, as well from questions from the audience, there seems to be a gap between those two sectors. And I hope on this panel we can either find some bridges or see the gaps more clearly and hopefully strategize and talk later on about potential solutions, how we can close the gap or how we can build the bridges. The questions I would like to ask first is more into the DeFi sector. So Lucas and Matthew, I would like to know, in what ways do you believe DeFi can disrupt or complement traditional finance? And linking to that, what are the key challenges that need to be addressed for this to happen?
Yeah, I mean, starting very high level, like finance is about 10% of global GDP. I think a lot of that is mostly there because it's layers of compliance, legal, back office, accounting, coordination, stuff that hasn't really been properly digitized. I think that like finance has changed tremendously in the last 100 years, but ultimately it still works the same way. And I do think DeFi is basically a much more efficient back office and will replace kind of like the rails of what finance is built on today. And specifically, the idea that settlement is separate from execution is something that doesn't exist in DeFi, yet is causing huge issues and massive overhead in traditional finance. Specifically for Centrifuge, what I'm really excited about is private credit is the largest asset class in the world. It's also extremely expensive. If you look at credit funds, they have somewhere between 1% and 2% in like cost a year of like fund administration and NAV valuation calculation, right? Like a list of like 15 different intermediaries that largely can do functions that should just be built as smart contracts on chain. And so I think that's where like we'll see a lot of value being created, or like new like financial products like changing how they look and how they work. And ultimately, I think what that will lead to is, because you can make it so much more cheaply, you can make markets more easily, you can host an exchange in a much more low-cost way, right? Like we'll see a lot of asset classes that today are largely illiquid actually becoming liquid. So, and private credit is what we focus on, like if we're able to bring liquidity to the small business loans, the trade finance assets that today are not really traded, you actually change the interest rates, how these assets are valued, right, based to like market pricing, and that is like a tremendous opportunity.
Yeah, and going along with that idea, I mean, if you look at the traditional financial market, I think there's $23 trillion in net asset value presently, give or take. And if compared to DeFi, it's about 15 billion. So there's substantial room for growth there. And the way I see it is DeFi is innovating upon TradFi the same way that internet innovated upon brick and mortars. First, the internet was there, and it was simply replicating what already existed in the market, and you just had a digitization of these assets, and in effect, it was imitating what we had in the real world. And then once it was able to effectively imitate, it was then able to innovate upon that to the point where we had technologies and that were only possible in this digital space. And I see DeFi following a similar trend where we're beginning to imitate a lot of TradFi instruments and tools and technology. And as we imitate that, then we'll start to understand more how that can be innovated upon and capture more of that 23 trillion.
Very good. We might gonna come back then later on to a few other questions on that one. So now to you guys, Ray and Remy. How are your companies, how do they adapt to the rise of DeFi? What are the strategies you guys are implementing or executing, let's say a bit like pushing forward to be competitive and stay relevant, if that is even a case? Remy?
Yeah, sure. I think from our window, first of all, for us, it's, I would say we have to learn about it because we have to evolve. And in two ways, I think Ralph and Hans-Peter, Sasha mentioned it, some of those crypto blockchain entrepreneurs can become clients of the bank. So we have to understand their business to manage their wealth, but also they may need to raise financing, raise equity, sell their business. So we need to understand, for us, it's more of an opportunity from that point of view. Then I would take also the view that, and it's a comment that Christoph made, that people will want to pay for advice at the end of the day. And that's what we have to be able to bring. So clearly, if it's a commoditized service that can be done better by blockchain, that's where it should go. And we should focus on where we can add value. That's where I see our role evolving.
So for us, I don't believe that our business gets affected by DeFi. So the question that my partner asked during the last panel of what's the point of having a venture fund today? I mean, there's a real point. There are service providers that are there to stay because DAOs are a good concept, but they're not ready. Generally, the investment DAOs don't work really well, but there are exceptions, and I'll give you an example in a bit. But to stay ahead, we need to invest in the right projects. And so how do we look at DeFi? Our thesis is very simple. We look at real-world assets, and real-world assets can be described. There's a spectrum of fungible assets and non-fungible assets. So at one spectrum, you have stablecoins. I mean, the best, most successful use case today in DeFi are stablecoins. I think it's unacceptable that you can't make a wire transfer during the weekend. It's just, it makes no sense to me. So stablecoins make a lot of sense. They're useful, and specifically useful in countries that have major issues. I'm Lebanese myself. We went through a financial crisis. We went through civil war 25 years ago. Those are tools that are really useful when you actually live it, and it can happen anywhere. So that's on the fungible side. In between, you have credit. Lucas will cover that part. But also you've got, and this is part of the, those are services or applications that cannot be provided by the traditional financial system. You've got non-fungible assets. So take an example today, NFTs, which is a great technology. It's not only apes, it's actually being used to store IP. So you have the concept of IP NFTs. A Swiss company called Molecule has issued that concept, where you have researchers that can collaborate on a specific piece of research, and you use crypto incentives to have them collaborate together under a DAO, which actually works. You can look up Vita DAO, which is a longevity DAO out there. focused on longevity. They use IP NFTs on the research side, and you've got researchers that collaborate around it. And so essentially, if you can imagine, once that IP, the financializations of NFTs take off, you can take that IP, use it as collateral, and use DeFi, the DeFi ecosystem and its composability, which is not possible. A bank would not be able to provide a system or that service. So this is how we stay relevant, by investing in the winners of the space with that concept of real-world assets. Companies like Centrifuge, and but thinking about the demand side, because it's the demand side that will help DeFi take off, right?
All right. So at the moment, I still see a gap. And Ray, you mentioned some bridges that on the investment side, there are possibilities that traditional finance-based people can invest into DeFi. So let's leave it at that. But one point came up, and I would like to have the whole panel quickly give an answer on that: stablecoins. And you put stablecoins into the DeFi sector, but most of the stablecoins are actually centralized coins like USDT or USDC. So how do you guys see that? Is that good enough as a DeFi stablecoin, or do you really need a DeFi stablecoin, Lucas?
I'm a huge Maker bull. So Maker is the most popular decentralized stablecoin. I think, yes, like you do want to have decentralized stablecoins, but for many purposes, like USDC is actually perfectly fine. The big challenge comes with, I mean, what's the risk involved in those centralized stablecoins? I think like there have always been questions of like what the balance sheets look like of a USDC and Tether. I think USDC does a much better job at explaining what your USDC is actually backed with. But like what I definitely would say is like the worst outcome of this like decentralized versus centralized stablecoins is if we end up in a situation where we have like central banks managing stablecoins directly. I think you need to have some regulation around like government-backed stablecoins that are actually legal tender, because for a lot of like institutional adoption, like the idea that you're financing a house or a big real estate project with a couple $100 million in a token that you don't even know if like what will happen when the issuer goes bankrupt or it gets outlawed or whatever, right? Like that's obviously like still a barrier for like DeFi really to get adoption. But I think that on the flip side, if we're ending up in a situation where actually DeFi becomes fragmented and kind of like different geographies get like actually split apart because of like different countries wanting to push their own CDBCs, that's I think when it gets really tricky. And so like the idea that a maker can actually exist and provide like a truly like international like borderless like way of exchanging money, like coming back to what Ray was talking about with the currency issues in Lebanon, right? Like that is I think a much more interesting version of the future that I'd like to see.
Matthew.
So I'll play the antagonist here and take a bit of a controversial role. And there's a lot of talk, at least in the US, of this Operation Choke Point 2.0, where all crypto-related banking is being crypto is being segregated from the banking industry, and obviously this poses a lot of problems. When it comes to stablecoins, it seems to me that this is our self-imposed choke point. If the idea of crypto is to self-custody and move away from centralized entities, then the idea of using fiat-backed stablecoins seems to be counterintuitive. And I don't have a good solution in place, and I believe the stablecoins add a lot of value to the ecosystems where they're deployed. But the longevity of crypto is currently directly dependent upon the longevity of TradFi. And if crypto is going to eventually move into its golden days, then I think there needs to be some more separation between the two. Otherwise, we'll continue to be dependent upon the traditional financial systems.
Right.
I mean, I think there needs to be progress, right? I'm 100% with my colleagues in that you really want a decentralized stablecoin. But the reality is that, you know, the best decentralized stablecoin today is DAI, so Maker. But Maker cannot scale. And correct me if I'm wrong, and Lucas will correct me if I'm wrong, because he knows that way better than I do. The way it can scale is by using real-world asset as collateral, right? And this is where Centrifuge comes in. And so what I'm saying is that things are moving, there are fixes, and we're going to get there. But hey, we need to start with a half-baked solution. But yeah.
Remy?
Yeah, I mean, I would echo Ray's comments in the sense that it's clearly, you know, in evolution still, and in that sense, you could say it's ironic that decentralized finance needs centralized solutions because, you know, it doesn't really make sense from the outside. But, you know, as we say, Rome wasn't built in a day, and I think it will be an evolution over the coming years. All
right, so if I summarize it, it could be a bridge. Stablecoins could be the bridge between DeFi and the TradFi. It's a needed bridge. Maybe it's not the most wanted bridge, but at the moment, it's something that needs to flow. Otherwise, DeFi cannot prosper, kind of. But we can do another round in the end. Everybody can give his idea to that. Going again to a more TradFi question. How can traditional finance institutions leverage the blockchain technology? Because we always hear that blockchain will help you to get more efficient, cheaper, whatever. But on top of that, with DeFi, the question is more, will it improve your service offerings? Can you use some of the DeFi concepts to improve your service offerings? And are there any specific use cases you can highlight? Remy?
I would say two things. One is from our clients' point of view, so the companies who actually need to raise funding, because that's, you know, who we serve in the first place. If there's a better way for them to raise funding, then that should be our advice to them to go and use that. And what we find, especially because our clients, they're small, medium-sized companies, and still today, the financing markets are very inefficient. So, you know, in that sense, we would welcome better solutions for them. And then for us as a bank, because we see it ourselves when we, you know, do a loan financing where we get security on a real estate assets or on some shares or IP, etc. It's so inefficient in terms of process, and we pay thousands and tens of thousands in legal fees, no offense to lawyers in the room, and it takes a lot of time, and the enforcement is depending on the countries where you get the security, is very inefficient. So I would see, and again, I'm not a blockchain expert myself, but this for us would make a lot of sense if we could have a more decentralized way of you know, getting access to that security. So there's in my sense, as providers of financing and wanting to use that collateral, if we could use blockchain, that would make sense for us.
Ray, how do you see that?
The efficiency gains are there, whether we talk about credit, private credit with Centrifuge, or you know, you have a very large amount of HELOCs, home equity loans in the US that are being issued. We're talking about close to 200 million. I'm not going to name the company, obviously we're invested on top of a blockchain. And their customers are actual banks. So you close the mortgage much, much faster. It's much cheaper. It's a hybrid, essentially. It's not fully decentralized, but we're getting there. So those efficiency gains are really interesting. But in my opinion, I think I see a future where over time, and it will take time, we as individuals will start getting, there's going to be more jobs where you get paid on-chain, which means that this is the only way, in my opinion, DeFi takes off, is when, because the move from fiat TradFi to DeFi, is not fun, right? It's not easy, and this is where I don't see them competing for the current demand today. But the demand of the future, where you get paid on chain, where it becomes really easy to keep your assets on chain, opens up new roles, is what is important here. And the reason why banks or traditional institutions should continuously experiment is to be able to tap in to that demand in the future, if even possible, which I'm not sure it's going to be possible now.
All right. Moving over to the DeFi guys. Matthew, are you trying, or your company, is it trying to make some collaboration with TradFi? Are you sort of looking for certain bridges to build?
Well, I come from the TradFi market, so I do have a soft spot there. But our company, we're really and solely focused on creating liquid and efficient markets for digital assets, and by making markets and providing that liquidity, there's minimal interaction between us and TradFi. I would say that probably the closest bridge there would be stablecoins. And as I said previously, that we're dependent upon them and TradFi. So there is a sort of symbiotic relationship there that needs to take place and coexist. But in terms of TradFi partnerships, we're big supporters of projects that are providing real world value and utility, like Centrifuge. And their ability to more effectively blend these markets and bring these traditional assets into a decentralized ecosystem.
So over to you, Lucas.
So we're for me, like TradFi, like there's a whole like back end which I think will go away. Like if we can have tokenized assets become as accepted as kind of like paper contracts today, this will be the future, right? Like it will be like ordering pizza on a telephone on an app, as opposed to like trying to call them and tell them your address. And so like that kind of like shift of going from like paper contracts, like trading assets over a Bloomberg terminal and like having a credit desk in every bank like talk to each other, as opposed to like other kind of exchanges, like that's going to change what TradFi looks like. But in the end, like DeFi itself, it was created for crypto native assets because there was no financial system for them to be used in whatsoever 5 years ago. So we needed money markets, we needed options to short, we needed ways to lever, to trade, right, for ETH and Bitcoin and everything else. And that, but in the end, like DeFi won't scale without like actually going out into the real world. Like at some point, like all this crypto native functionality, like we're not all living in virtual reality, so we'll need a way to deal with real assets. And so that the functionality and the places where we work with all sorts of TradFi institutions today and users today is like credit underwriting, like structuring, right? Like all of like origination processes, like valuation of assets, where like that's the piece of TradFi that makes sense, that actually brings value, that can't just be today at least abstracted away. And I think that's where we work with credit funds and the likes.
All right, so I would like to do a last round on the bridges, where your business sees a bridge or would like to see a bridge, that TradFi and DeFi can work more efficiently together, or that DeFi can grow quicker. And then we have a little bit of time left for the audience for some questions, because I'm pretty sure there are some questions, and then we close the panel. So Lucas, start away.
The place where we need to build a bridge is just to like simplify DeFi, make the risks and the technology understood, so that you don't need to add like a 2%, 3%, 5% risk premium or whatever for using DeFi to be competitive with TradFi, right? Like when I'm when I'm trading on Uniswap AMM, I need to be able, like a financial institution or a large asset manager needs to know that they can do so without taking crazy risk, whether that's regulatory or technical risk. I think that's like the bridge we have to build with just showing that it can be done safely, improving the tooling, also improving the understanding of how this stuff actually works for like the legacy world to come on chain. Thank you, Matthew.
The main place I can see that DeFi can really learn from TradFi is in security and auditing standards, proper regulations. This is a big barrier of entry to bring retail over into this new market, and there's a lot of work to be done there. And so I see this as the next hurdle that's being discussed and being worked on, but this is something that really needs to come together. And I feel that DeFi can learn a lot from TradFi and the hundreds of years of progress that they've had versus the couple of DeFi. And you know, DeFi is built on the back of TradFi, and so we need to learn from each other, and there's a lot of new innovations that TradFi can learn from DeFi, and hopefully bring on. But I think that the biggest thing is we need to bring in some of these security auditing standards to protect retail investors, to give them more confidence and faith in these markets, because without any intelligent, proper, smart regulation from within, it's going to be hard to really take traction.
Thank you, Ray.
Yeah, I mean, my wish, frankly, would be that you know, the actual bridge from TradFi to DeFi, you know, it'd be great if it's a great UX and everyone could easily move from one side to the other. Unfortunately, that's not going to happen. And generally, I think, and there are a lot of exceptions, but generally, I would say that the opportunity set for DeFi is not going to come from TradFi. It's going to come from applications that, you know, new business models that don't exist in the real world. We don't know when it's going to happen, where it's going to come from. There are some very, very strong candidates, but it's not that obvious. And so the opportunity set comes from the demand side, which doesn't really exist today. That's my opinion.
Thank you. Remy, would you like to see a bridge?
Yeah, I think so. I mean, in a way, if I make the analogy to capital markets, it's a bit similar in the sense that capital markets develop tremendously, and yet the banks are still here. They, you know, make money from the capital markets, and they also complement what the capital markets don't do well. So there's, you know, there's needs from both expertise and capabilities, and it would make sense for our clients to have another source of funding, especially for the small, medium-sized businesses who are core clients and cannot really access the capital markets anyway. So there I see a huge, you know, I don't know how that will work, but I see a huge need for our clients to have additional funding sources. That's where I would like to see a bridge, because we cannot do everything ourselves. And the other bridge, I touched on it earlier, the huge potential to improve our processes, and there we can learn from DeFi, I think.
So we have one question for the audience.
Thank you. Thank you for the great talk. My only question is, at some point in the future, do you think the term DeFi and TradFi are going to be redundant and it's just going to be merged into the finance? Or do you think there are components which are always going to be mutually exclusive, therefore always different?
I don't think there will be a difference. I think real world assets, digital assets, it's going to be the same. The same way that like capital markets is considered part of finance, where like it never was part of a bank's offering in the past.
I agree. If you look at systems in the past, they're always a part of what they were and a part of what they will be. So if you have TradFi moving into DeFi, DeFi is always going to have vestiges of TradFi embedded into the heart of it at some level, and it's going to have pure DeFi in it as well. But I think the TradFi DeFi monikers will be dropped. I mean, your C, D, Fi, Anon Fi, whatever Fi, we move into. I think this is just a natural evolution of technology and the economy blending, and yeah, I don't see this clear distinction between the two in the long run here.
All right. Thank you very much for your participation. Thank you.
Thank you.